There's a pattern in history that has destroyed every global reserve currency. Not most of them, every single one. The Portuguese real dominated global trade for 80 years, then collapsed. The Dutch guilder ruled for 80 years, then fell. The British pound reigned for 105 years, then died. Each followed the same 7 stages. Each believed they were different. Each thought their currency was permanent, and each was wrong. The US dollar became the world's reserve currency in 1944. That's 81 years ago. And right now, in 2025, the dollar is in stage 5 of the same 7-stage pattern. This isn't prophecy. This is mathematics. A sequence that has played out 4 times across 6 centuries. And the only question that matters is whether we are smart enough to see what's coming or arrogant enough to believe this time is different. Let me show you the pattern. The 7 stages that every reserve currency goes through, and exactly where the dollar sits right now. Before we go through the stages, you need to understand what a reserve currency actually is. It's not just a strong currency. It's the currency that other nations hold in their central bank reserves. The currency used to price global commodities. The currency that international trade is denominated in. When you're the reserve currency, every country needs your money. To buy oil, they need your currency. To settle trade imbalances, they need your currency. To hold safe assets, they need your bonds. This creates something called exorbitant privilege. You can print money and export it to buy real goods. Other countries have to produce goods to earn your currency. You can run endless trade deficits because foreign nations need to accumulate your currency for reserves. You can borrow at lower interest rates because global demand for your bonds is structural, not discretionary. Being the reserve currency is the ultimate economic weapon. It's why empires fight to achieve it and why they collapse when they lose it. Now, here are the 7 stages. And as we go through them, you'll see exactly where we are. Stage 1, military dominance and trade route control. Every reserve currency begins the same way, with overwhelming military power that controls critical trade routes. Not just having a strong military, controlling the pathways that global commerce flows through. In the 1450s, Portugal achieved something unprecedented. They mastered oceanic navigation. While other European nations were still hugging coastlines, Portuguese sailors were crossing open. Portuguese warships dominated the Indian Ocean, the South China Sea, and the Atlantic. They established fortified trading posts at strategic choke points: Goa, Malacca, Macau, Mozambique. These weren't just ports. They were armed fortresses where Portuguese cannons controlled who could trade and on what terms. If you wanted spices from the Moluccas, you dealt with Portugal. But if you wanted to trade with India, you needed Portuguese permission. They charged fees, imposed tariffs, and seized ships that tried to bypass their system. This military control of trade routes made the Portuguese real the currency that mattered. Merchants across Europe, Africa, and Asia needed reals to conduct trade in Portuguese-controlled waters. It became the currency of international commerce, not because it was backed by gold or economically superior, because it was backed by cannons. The Dutch followed the same pattern in the 1600s. The Dutch East India Company wasn't just a trading company. It was a military power. It had its own army and navy. At its peak, the VOCC had 40 warships and 20,000 soldiers. They conquered Portuguese trading posts, seized control of the Spice Islands, established Amsterdam as the center of global trade. Dutch ships dominated the Baltic, the Atlantic, and the Indian Ocean. If you wanted to trade, you needed guilders, the currency of the power that controlled the seas. Britain in the 1800s perfected this model. At its peak, the Royal Navy had more warships than the next 5 nations combined. Britannia ruled the waves wasn't poetry, it was fact. The British controlled the Suez Canal, Gibraltar, Singapore, the Straits of Malacca. Every critical choke point for global trade was British-controlled. The pound sterling became the global currency because British naval power made it impossible to conduct international trade without it. The United States achieved the same position after World War II, not just by having a strong military, but by controlling global trade infrastructure. The U.S. Navy dominates every ocean. 11 aircraft carrier battle groups, more than the rest of the world combined. The U.S. controls or has bases near every critical trade choke point: Hormuz, Malha, Suez, Panama, Babel, Mandeb. This isn't about defending America. It's about controlling global commerce, making it impossible for international trade to function without American approval. That's stage one: military dominance over trade routes. The dollar achieved this in 1945 and maintains it today. Check. Stage two: massive trade surplus, the accumulation of global wealth. Once you control trade routes, you start accumulating wealth from the rest of the world. It's not through theft, through advantageous exchange. Portugal in the 1500s ran massive trade surpluses. They bought spices, silk, and porcelain from Asia using gold and silver. But they sold European goods, textiles, weapons, and African slaves at enormous markups. The balance of trade flowed toward Lisbon. Portuguese ships returned heavy with Asian goods that sold for 10 times what they paid. This surplus built Lisbon into one of the wealthiest cities in Europe. The Portuguese crown's revenues from trade were so large that they funded the entire government without taxing the domestic population heavily. The Dutch in the 1600s did this even more systematically. Amsterdam became the warehouse of the world. Goods from Asia, the Americas, Africa, all flowed through Amsterdam. The Dutch bought low in one market, sold high in another, and captured the spread. They weren't just traders. They were arbitrageurs on a global scale. The Dutch trade surplus was so enormous that Amsterdam was filled with wealth, canals lined with mansions, the city's merchants richer than many European kings. Britain in the 1800s ran the largest trade surplus in history up to that point. They exported manufactured goods, textiles, steel, machinery, and ships to the world. They imported raw materials, cotton, tea, rubber, at prices set by British buyers. The terms of trade were dictated by London. Surplus built Britain into the wealthiest nation on earth. London's financial district handled more capital than the rest of Europe combined. The United States had the most dramatic trade surplus in history from 1945 to 1970. After World War II, America was the only major industrial power with intact infrastructure. Europe and Asia were rebuilding. The U.S. exported machinery, automobiles, steel, and consumer goods to the world. The trade surplus was so large that dollars flooded into foreign central banks faster than they could be recycled. As gold reserves swelled. Fort Knox held over 20,000 tons of gold by the 1950s, more than the rest of the world combined. This is stage two: massive trade surpluses, the accumulation of global wealth through advantageous exchange. The dollar achieved this from 1945 to 1970. But here's where the pattern begins to shift, because stage two doesn't last forever. Eventually, the reserve currency nation moves from producing goods to consuming them, from exporting to importing, from running surpluses to running deficits. And that's when stage three begins. Stage three: reserve currency status formalized, the tipping point. At some point, the world formalizes what's already true. They officially adopt your currency as the reserve. This is the peak, the moment of maximum power. For Portugal, this happened in the early 1500s. European nations and Asian merchants officially recognized the real as the primary currency for international transactions. Treaties were written denominating trade in reals, became the standard. For the Dutch, it happened in the mid-600s. The guilder became the currency of choice for international contracts. Bills of exchange were written in guilders. Even the British East India Company used guilders for some transactions because Amsterdam's financial markets were the most liquid in the world. For Britain, it happened at the Congress of Vienna in 1815, after the Napoleonic Wars. The pound sterling was explicitly recognized as the global standard. International.